morning, all you wonderful money masters and treasure hunters out there. It is terrific Thursday. Hard to believe how fast time flies around here, and you've got the PGA Tour starting their day off. Some of those guys have already teed off. They're playing out in Orlando at Bay Hill. And, folks, absolutely a fantastic golf course. If you are a golfer, you need to go out there and play Bay Hill. Absolutely a blast. I remember in the days when John Daly was playing hole number 6 there, folks. It's a par 5, and you can decide to cut off as much water as you want. You know, you got to love John Daly. He's certainly, he's still on the tour. And he certainly brings about a little bit of controversy. And I watched him dunk about 5. This was during the tournament. 5 in the water, trying to cut off maybe just a wee bit too much of that corner out there. And, folks, you don't want to cut your corners. And thanks so much for joining me. And absolutely love being here with you. Hopefully you are off to a great start of your Thursday. I know I am. And it's going to be a great start. It's going to be a wonderful day. I'm going to be heading out to Denver in just a few hours, just fueling the engines, if you will, getting ready to take off, and absolutely looking forward to getting out there and being able to touch some folks' lives. Right now, if you just take a quick tour around the marketplace here, you've got the Dow futures off this morning about 60. S&P's down about almost 8 points. NASDAQ futures down 13. Russell down 6.5. King dollar up 19. 20 ticks right now. You've got gold trading off 15 bucks at 16.34. Silver off 63 cents, trading out at 31.60. Light sweet crude just got a little bit cheaper for you to buy some oil. Although I will tell you, got a great lead from one of our guys in the den. Folks, the den is one of the things when you do want to take your life to another level, it's just so important to make sure that you are surrounding yourself, and really finding a different peer group. And our den is absolutely one of those places to do it. You can learn so much. Even myself, I learned where to get some synthetic oil for my ride. And it was quite a bit cheaper than when I played at AutoZone or whichever one of those stores it was. And I believe it is at Walmart. So, folks, if you're in the market, if you buy synthetic oil, and you should take care of your car, you should take care of your engine, whether it's your car's or your own. The best way to be able to take care of anything, folks, and I'm going to take care of you. You can always call me, 877-927-6648. I'll show you the patterns in the ES Mini. It's just normal patterns, normal breathing patterns. I'm going to show you, how you too can be able to take a look at a chart, understand what's going on out there. And because, folks, there are no failures in life, only outcomes. But you see, the whole key in knowing your outcome is absolutely critical to anything that you want to do. It doesn't matter whether it's making money, whether it's health, wealth, relationships. Just go take a look at those 3 categories. They typically will take a look. They'll typically cover just about everything. But the whole key, when I say there are no failures, only outcomes, and what that really means, folks, is that you want to be able to know your outcome. So in anything that you want to accomplish in your life, and hopefully it's always about being able to take your life from where you are to where it is that you want to go. And you want to make sure that you're focused there and know your outcome. Number one, most important thing, yesterday I mentioned that people will spend 95% focused on the problem when they really should be spending 95% focused on the solution. So whatever it is that you've got going on in your life, you can list out your problems like that. But don't spend 95% of your time focused on your problem. Spend 95% of your time focused on whatever the solution is. If your problem is you're not sure what these markets are doing, then spend 95% of your time on the solution. Trying to, whether it's reading materials, whether it's attending courses, whether it's getting coaching, whatever it is. If you've got a problem in your business, you don't have the right cash flow, don't spend 95% of your time on the cash flow or the problem. Spend 95% on the solution. And so know what it is that is your outcome. In fact, yesterday I gave you a little bit of a clue. Make sure that you've got at least 3 different options out there, maybe 3 different outcomes, and then identify which of those outcomes is it that you really want to be able to accomplish. And then what we talk about is you need to have reasons come next. Because if you don't have strong reasons to accomplish what it is that you want, whatever it is that you're trying to solve, folks, it's going to fall on deaf ears. It's going to last for a week. It's like saying that you want to lose weight or go on a diet. If you don't have a strong enough reason why, how long is it going to last? Exactly. If you don't really have a strong enough reason why to be able to learn how to play the money game, make money, understand, these markets, how they're moving, folks, if you don't do that, you have to have strong reasons why. Make sure you've got strong reasons why. Actions which we call massive actions around here, those will come next, folks. So make sure you know your outcome, and then make sure you've got a strong reason why, and ask yourself, are you really taking massive action to get you from where you are to where it is that you want to go? Well, I do know there are some folks in Denver that are taking some massive action. I'm not talking about Manning, I'm not talking about Tim Tebow. I'm talking about those folks that are going to be attending my Master Trader course. It is going to be absolutely wonderful. It's going to be great. And I'll be out there tomorrow, folks. It's still not too late. If you wanted to get in on that, you can still just give the office a call, talk to Leanna or Mike. They'll get you all set up. We don't start till 8 a.m. tomorrow. So if you've been sitting on the fence, move off that fence, folks. Take some massive action. I will then be doing a Master Trader course in Tampa, April 13th and the 14th. That's a Friday and Saturday. And then in Boston on the 27th and 28th. Folks, time is something you can't get back, and it's something that you do not want to waste. And we're not going to waste any time. We're going to go out to Carlos in California. We're going to start our day with Carlos. Carlos, thanks for calling. Thanks for holding.
Oh, Steve, thank you so much. Thank you, and I want to start by saying again thank you, because you helped me a lot with the TCA, putting the stop
good
more in a wider range. But today I call you about Apple.
Okay.
And I'm sure Apple with 10 shares.
Okay.
Okay, it's my scout. And I'm in 600 and let me see exactly, $606.15.
That's what your stop is?
No, that's the price, my entry price.
Oh, really?
On my short.
Oh, good for you. So you're at 606, and so you caught that up really near the highs because it got up to 609.65. Love that. Okay, how can I help you? Tell me what you want to know.
Okay, this is what I want to know. First, I placed my buy to cover.
Yep.
115.
115. Okay.
Yeah,
all right.
That's because the range that Apple trades, I think I'm willing to risk. So in 10 shares from 106.15, 606.15.
Yep.
All the way to 615.
615.
No more than that.
Yeah, and so you close out. Really, we take a look at where you closed out yesterday. You closed out at 602. So I'll take a look at your real risk right now. It's about $13. And apparently we were having some technical problems here before I came on the air. So I was kicked. My tool that I would use, my position size calculator, is kicked off. So it's going to be pretty difficult for me to log into that here. Give me a second, though. I'm going to try to do that. Or I may be just simply doing it during the break here. But give me a second, see if I can at least get that thing going. Now, you've got a stop in place, so that's great. You've got that move. And then tell me where your target is on this, and then I'm going to pull those charts back up while I'm multitasking here. I love multitasking. And so tell everybody out there where it is that you're looking to be able to place your exit on the other side.
Okay, I want to exit this once it tests the swing point. If it reaches the swing point, and if it does it with lower volume, I just gonna get out. But if it breaks the swing point.
Okay. Which swing point are you looking at?
I remember Tom says that I have to look on the daily.
Yep.
And I don't have the exact price, but I know once he said that Apple is hitting the swing point.
Yeah.
And I listen every single day.
Yes.
Actually, I'm waiting for him to say
okay.
hit the swing point and didn't break it with volume or break it with volume.
Okay, great. So let me give you an area where you should be looking at before you hear that from Tom. So the one area that you want to look at here, and what you want to make sure that you do is you want to make sure that you're always respecting gaps. Okay.
Okay.
With volume, without volume, always respect a gap, because avoid a price, and yes, eventually gaps will get filled. But what you want to do is you want to take a look. In the case of Apple here, you've got a number of gaps, and the one that we're going to take a look at is the most recent, which is March the 14th. And March the 14th, the low on that gap is 575.40. And what Apple did was 50 million shares that day. So as Apple is moving down, now that swing point, if you will, or it's not so much that it's a swing as much as, let's say, it's an inflection point. And that inflection point, you're going to take a look at the high is 594.72. And we'll take a look and see where Apple is trading in the pre-market. But your first piece of information is going to be coming between the price points of 575.40 and 594.72 as you're starting to come into that gap breakaway area. And what you want to be able to do is if you get down below, for example, let's say it trades below 570.40, closes back up above that area, and does it on less than 50 million shares, say it does it on 40 million shares, so now you're 10% lighter on volume, that's where you would want to maybe take some of your profit, okay, because it doesn't have enough to bust down. The real swing point that you would be taking a look at, and Apple's going to have to push through this here. Now, look, if it closes inside that gap, if it closes below 575.40, even if it's on lighter volume, go ahead and stay in the deal and in the trade. Because what it's trying to do is get down to the top of that gap, which is at 568.18. So that's the area. Now, the actual swing point that you're going to look for it to break is March 6th. And at March 6th, if you can make it all the way down there, you probably won't have any problem breaking March 6th because that only has 28 million shares. Now, the actual average true range over the last 10 days on Apple has been $13.24. But we're going away to a break, Carlos. And if you would be kind enough, stick with us. Folks, you can get in on the action as well, 877-927-6648. Folks, if you haven't tried my position size calculator, go to the homepage of TFNN.com. Sign up for right now. It's absolutely free. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You got the Dow futures trading down about 70 points. ES Mini off about 9. And we're going back out to California to our man Carlos, who is short Apple. And he got in, shorted it right around the 606 area. Right now, it closed out at 602.50. And in the pre-market, the last trade fired off at 597.70. So Carlos is already in the money. And so one of the things, Carlos, as we were going to break, I wanted to make sure that you knew that the average true range over the last 10 days has been $13.24. So if we just take $13.24, add it to the 602, that gets you to 615.74, and I think your stop is somewhere right around that vicinity, right?
Yes.
So the one thing you may want to do, even though it's trading down here today, expect a volatile day. We're talking about New Moon Thursday. New Moon comes in about, let's see, 8 minutes from now. Not that that really matters, but we'll celebrate it anyways. And so you've got the new moon. It's going to be a volatile day. You can expect that, obviously, with futures being off like they are this morning. What you want to do is just make sure that you might need to adjust your stop up just a little bit.
Just higher, right?
Just a little bit higher, because I think you're right inside just the normal daily movement, of Apple. But 1324 is the number on that, okay?
Okay. Now, can I ask one more?
You can ask 5 more if you'd like.
Well, this is the situation, right? I'm building a little core positions short.
Yes.
Remember my FAS?
I do.
I got to stop out, but I got it back in. I have TCA, Apple, and FAS. Right now I'm on the money and the 3 of them.
Yep.
But 2 of them are 35 shares, and Apple only 10 shares.
Right.
Now, I want to apply the system.
Yes.
With mixing your system and Tom's system.
Yes.
Using the range.
Yep.
The trading range.
Yes.
The average range.
Yes.
And I want to use 2 Tom's, letting the market to get me out.
Right.
Once I get more comfortable with more profits, I want to remove some of the money.
Yes.
And just play with some of that money, part of my money and part of the market money. So
Sure.
I don't feel that pressure of holding the position.
No, absolutely.
And
absolutely.
Because it's getting so volatile that I don't want to get so pressure to take my profits and then end up leaving or taking my money too soon.
Well, the easiest way, the best time for you to be able to accomplish everything that you just said. So you know your outcome. And so what's really great is that what you just did is you identified exactly what your outcome was, and you have strong reasons why. So all that's really left now is just the action steps. And one of them is just simply our discussion this morning. But one of the things that you want to do, that everybody should do before they enter a trade, is do all of the work up front. And all that work means is I'm going to enter here, or I'm going to wait for a certain signal, but you're going to identify a place where you're going to enter, and you know where it is that you're going to have 2 sides of the stops. You're going to have where the market is going to take you out because you were wrong on the trade, and where the market is going to take you out where you are right on the trade. And so, and we talked about, areas for you to go ahead and take a look at. In this case here, because Apple doesn't really have a pattern, what you're taking a look at is for Apple to come down and test out, an area of strength in this case, because that area is going to be where it gapped up on March the 14th. So you mentioned 3 trades that you're in. One of them I like. 2 of them have a little bit of, everything has risk in it, but 2 of them are stronger than the other. TZA is weak because you're taking a look at the small caps. So when you're going short, and this is just what I would throw out to you to consider, when you decide that you want to go short, what you should always look for, in my opinion, of course, what you should look for is weakness. You want to find what it is that's weak out there. Now, in the TZA trade, what you're saying is you're in essence saying that the IWM is going to go down. In the TZA, the IWM, the Russell 2000, is the weakest of the 4, 5 indexes, whatever it is that you might take a look at. In our case here, I primarily focus on the Dow, the NASDAQ, the SPYs, and the small cap. So, it is the weakest of those 4. In the case of Apple, what you're dealing with is something that's really strong.
Yes.
So, and it hasn't played out a card yet. But that's okay. It doesn't mean that the trade's wrong. It's just that, I like to buy strength and I like to sell weakness. That's just my, philosophy. And I would just throw that out there for you to consider as well.
Yes,
okay?
I really agree with you. And the only reason I put this position is...
Yeah.
Oh, I'm sorry.
No, you're good. The only reason is because, look, I'm going with your intuition, and the rest of the folks in the den are too. They're going to go short. Hey, Carlos, thanks so much for calling.
So
Have a great morning. We'll be right back, folks. You've got the futures off this morning. We're going to go see where the market is going to pop. Really, it's going to drop, and then we're going to see if it's going to pop. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow trading down 60 points. S&P's down 9, composite off 18, small caps off 8. Small caps leading the way down 1%. If we take a look at what's going on leading up in the way of price, you've got Netflix leading up with they're up $2 this morning. Convergys is up $1. You've got Western Digital hard drive company up 94 cents. You've got Dollar General up 73 cents. GameStop, GME. They are up about 60 cents right now. On the downside, leading on the downside, Rand Gold, GOLD, off $10 right now. That's down almost 10%. Apple down 1% off $6, trading down to $5.95-ish. You've got Broadvision down $3. Rackspace, RAX, they're off $2.50. Cummins Inc., they're off $2.70. Parker Hannifin, PH, they're down $2.64. Lululemon, they're down $2 this morning. Rio Tinto off $1.80. FedEx off $2.11 after, I believe they were releasing numbers today. FedEx, FDX is the ticker symbol on that. And their Q3 profit more than doubled on strong holiday shipping. Gotta love that. Folks, 877-927-6648. That's our call number. Let's go over to Boston, where it is summer. It's going to be in the 80s. You need to make sure you got your SPF 30 out today, Rich.
Well, I think it's probably more like 50.
50? Is that the high?
No, the SPF.
The SPF. Okay, great. Yeah, I was hearing it's going to be in the 80s up in the. I don't know if it's
that's true.
Is it really? How about that? Yeah. It's warmer. It's warmer up in Boston than it is down here in Clearwater.
Oh, man, we're loving it, too.
That's great.
We're loving it.
That's great. So, because it's so warm, you're ready to buy some bullion.
Well, actually, Steve, here's my situation. Last month, when the bullion was kind of climbing up,
yes,
I get in at $17.50.
Okay.
And you know where it is right now.
Yep, $16.30.
So I was just kind of curious, your thoughts on kind of my position right now.
Yeah. So, but now when you're buying bullion, you weren't necessarily buying that for a short-term trade, were you?
Well, I would have considered probably just stepping out at 19.
Okay.
That's where I thought it was going to go, probably 19, 2,000, 2,100. So that's why 1750 didn't really gain too much.
Yes. So, when I take a look at gold here, I don't know if you're watching us on Tiger TV, you'll be able to see this pretty well. And when we take a look at gold, one of the things we're going to take a look at the trading range that gold is in right now, because it's in a really wonderful trading range if you can catch this right. And that trading range, the high of that trading range is right there in that 1790 area. 1791 might be the high of that trading range. 1790, the actual 1804 was what it hit November 8th. And then when it came back up and it tested that area, did it on the 29th, got up to 1792. Now, the low side of that trading range has been hit twice now. September 26th, the low was 1534. You had some volume. That area was tested on the 29th of December, meaning it got down to 1523. I believe that where we're going to see gold head to here is right in that 1553, maybe all the way back down one more time into the 1535 area. And that's where, just doing an ABC down, 1553 would be a normal A to B equals CD. That would be a 1 to 1.272. And the reason why I say that is because the retracement that it did, the conviction that it had when we had that 100-point down day and that huge bearish engulfing, when it got down to the price level of 1688, that was a signal to possibly, take a look at getting out of your position. But if you're going to trade gold, if you want to trade gold, don't do it through bullion. I mean, if you physically want it, that's a whole different story. But you would be much better off going ahead and buying and trading gold just simply through the GLD. And the reason, Rich, is that you're paying, even if you're buying gold in its rawest, let's say, form, in 1 ounce, 10 ounce bars, you're still paying a much higher premium than you would between what your brokerage costs would be, and the spread that you've got on gold. Because, if you're buying Eagles, you're looking at about a 4% spread between buy and sell. Sometimes it's a little bit more, just depends on what's going on in the market. So what you would like to do is really, if you're going to trade gold or silver, do it through the SLV, do it through the GLD. That's if you can't do the contract. The contract would be better because then what you're dealing with there is your stops are in place and you're going to get stopped out versus trading the GLD and maybe having your stop get jumped. But that's your only risk when you're trading the commodity through a ETF. The same thing holds with currencies. I really recommend that people who want to trade currency, instead of focusing on the ETF, just spend a little time and learn how to actually trade the currency pair. It is a much better way to trade because then your money management is really protected in there. So, what I do think is that we're in a trading range. It is a wide trading range, and I'm looking to buy gold at 1553. That's from a contract standpoint. Physically buying gold, I think, is always a good thing to do to continue just to, add to your stockpile, if you will, because you're just simply diversifying your holdings, physical holdings. So does that help, Rich?
Yeah, well, it's kind of.
I mean, it might not be what you want to hear.
Hoping you'd be saying, "Oh, yeah, no, that's a safe. You're safe, and in 2 months, you're at least going to be able to."
I do think gold's going to. I think what's going to happen. So this trading range, the beauty of this trading range is that we've got wide price. You're going from 1800 down to 1530, if you will. And so that's a really nice trading range. So that's the consolidation area, and we can see gold in this trading range for a long time to come. In essence, it's really been inside this trading range going all the way back to May 2011. Gold traded up. The high was 1577. So we've been inside this sideways trading range now, price the low at least, going all the way back to 2011. That's you don't usually find trading ranges where you're dealing with this type of move. So you've got to. What you need to do is you got to know your outcome, and that means you should, when you enter the trade, whatever it is, you should know what your entry price is in both stops, both the stop where you're going to exit when the market pays you off, or if the market goes against you where you're just simply going to let it take you out. That's the absolute best advice that I could give you would be that.
Okay.
But if you want to sell your gold or you want to buy more gold, I'm going to help you with that, Rich.
Yeah.
All righty.
All right. Thanks for everything.
Hey, you bet. Yeah. Hey, have a great day. And, folks, you bet. 877-927-6648. Dow's off 49 points. Let's go look at those patterns that are out there. Let's go look at those patterns inside the ES Mini. And those patterns are just simply screaming at us. And the first pattern was one we were taking a look at yesterday. Let's go ahead and, or maybe I was dreaming. Let's go ahead and draw that first pattern in there. And that was making an ABC down. Our B point came in at 11:30. And that was on the 19th, and it just simply did a shallow 0.382 retracement, retraced up to 3 a.m. on March the 20th. I believe that was, my days are all messed up, so I'm not going to even try to figure out what that was. And I'm going to get rid of these red lines here. And what you're going to see, folks, you're going to see what it did was a 1 to 1.618, A to B equals C to D. Got a little bit lower than that, but then, you know, the bulls came in and they fought off price. It got actually down at 10 a.m. on the 20th, got down to a low of 1391.75, closed out that session at 1395. When you do, and when you take a look at, folks, you want to really understand that C to D leg. As we first that's going to be revealed to you, the way that it works is that B to C leg. In this case here, the retracement was a shallow retracement, only 0.382. That means you're going to do more than a 1-to-1 A to B equals C to D. Then what you can do is you can take a look at how is price moving along that C to D range. Well, one thing you saw, you had a wide price spread at 5:30, between 5 and 5:30. We're looking at a 30-minute chart on my screen, and that was on March the 20th. You came with that wide price spread as you were coming into your D point, because your D point is really 1-to-1. That's what you know is typically going to happen, and you want to be able to watch what's happening at that D point. Well, you get wide price spread. You're traveling on the inside of that C to D leg. That tells you you've got lower price coming at you. Does it have to happen? No. But I've traded these enough to know that that's what you want to be paying attention to, folks. And sure enough, when you do a 0.382 and you are traveling on the inside, 1 to 1.618, that's what it's going to do. Go get the Art of Timing the Trade, and I forget what page it's on. I'm going to have to reference that for next week. And I won't be here tomorrow, folks, because I will be traveling, and I'll be spending my time with everybody. I will be focused and present with all the folks that are good enough to be attending the Master Trader Series course that we are doing out in Denver. This does a 1 to 1.618. When you do a 1 to 1.618, you're going to do something else. You're going to breathe a little differently. What, in fact, does the ES Mini do? If we go take a look at the retracement off of the top coming in at 2 o'clock in the afternoon on the 19th, all the way down to the low that was put in during what we're looking at here, which was March 20th, it does a 0.786 retracement. You know, and you take a look at when you're coming up into that 0.618 area, you start coming up into that 0.618 area, you've got a pretty good, you can see right here as you're coming into the 0.618 as it ends that session. Who is in control of this session right here, folks? Who is in control of this session? Absolutely the bulls. You know, you start down here, you close at your highs, says, okay, that means you want to go up to the next floor. And that next floor, as we know, is going to be that 0.786. It gets up there. That's the 1404 area. Where does it get to? It gets up to a high, really, of 1405.50. 1405.50 and 1404.52 was the price projection. You got to love that. So now what is going on? Well, what you're doing, we did a 1 to 1.618 on the way down, right? Yep, that's right. Now let's go take a look at the next ABC that was forming after you do a retracement. And that A point that we're going to start with is going to be out at the 5 a.m. March 21st time frame when it got up to a high of 1405.75. B point that we're going to be taking a look at is the one at 11 a.m. That was on the 21st. And we take a look at a 1 to 1 point. Now, take a look at this. Remember, what I just said was take a look at the C point. The C point as you are coming to the C to D leg, if you will. Well, first, let's do this. Let's back up one step. Let's go take a look at the retracement that did off of the A to B. The retracement off of A to B here was just below the 0.618. So just below the 0.618 area, which would have been 1401.64, it actually got up to a high of 1475. So it does just a great 618 retracement. Let me get rid of that. In fact, I'm going to get rid of this other stuff here just so it cleans it up, makes it a little bit easier for you to take a look at here. And oh, by the way, I didn't say Happy New Moon. The new moon came in about at 9:38 a.m. While Rich and I were talking gold. Now, take a look at this A to B equals C to D. You come off of this C to D leg. You start this C to D leg with what? wide price spread. Real conviction. This was yesterday morning. This is at 11 o'clock at night on the 21st. And so you know what this is communicating to us, and you just did a 1 to 1.618. What this is communicating to us is this is going to do a 1 to 1.272, maybe a 1 to 1.618 as you're coming into. But you did do a 0.618 retracement versus on this A to B equals C to D, we did like a 0.382 retracement. So what in fact happens? You get down to that price projection. The 1.272 is 1387.09. Well, we know that it's not going to trade to 09. So we're just going to 1387. Where does it actually get down to? It gets down to a low of 1386.75. That, folks, is a beautiful thing. Now, what do we do after we reach that area here at 6 in the morning? Just simply build cause, trade sideways. As the market opened at 9:30, tried to get down there and attack that area. It closed really near that same session low. Right now, you're trading up. Now, what you'd want to do is let's go take a look at some shorter-term charts. So these patterns, all that I really want to be able to show you is that these patterns repeat themselves. So you just saw 2A to B equals CD down, right? Let's say that the market pulls back from here, right? It's completed a pattern. Now it's going to do some type of retracement. If we take a look at the last time that we completed an A to B equals C to D, what did it do? It did almost a 0.618 retracement. Well, 0.382 on this, and I'm going from the large move all the way from the A point to the D point. What you'd be looking at is you'd be looking at 1393, 1394 as your 0.382 area. 0.618 would be, and if you take a look at that, also that area, you can see right here where you had that conviction at 11 p.m. So you had you had a nice wide ranging bar, if you will. That would make sense. That 0.382 is an area when it gets up to 1393. You're going to see some turbulence going on there. You're going to see some folks maybe taking some money back. If they were in a losing position, just trying to retool. More likely, if the ES Mini can bounce from here, you're looking at it getting towards that 1397, 1398 area. Now, what you'd want to do, as you're taking a look at these ABC patterns, what you'd like to be able to do is dive down into some shorter time frames and see if there's any candle patterns present. Well, if you go down into let me get rid of this stuff here. If you go down into as it was making its 1 to 1.272 at actually 5:40 a.m., what you're going to see here, folks, is you're going to see a hammer candle. That low that we put in there at 1386.75. So you're doing a 1 to 1.272, and it was topped off on a 10-minute chart and a 15-minute chart with a hammer. It was my hammer candle. It was borrowing that hammer, folks. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Hopefully you are having a fantastic Thursday. Even that's for Friday, but I got to get that fantastic in there since I won't be here tomorrow. I will be with the other master traders in Denver, and I'm not sure who is filling in, but today, stay tuned. You've got Tom and I coming up next doing the Money Master Show. Then Kate Stalter, we are going out to Santa Fe, New Mexico. Then from 12 to 1, we're going just down the street from Santa Fe. Well, it's more than just a hop, skip, and a jump. Out to Tucson, to Larry Pesavento. The warm-up band for the Tom O'Brien Show today is Ken Shreve. He's in from 3 to 4. And, folks, thanks so much for joining us. You know, it is called proximity, to power. The way to be able to, when you have your outcome, and I know that you're listening in here, because you want to be able to make better trading decisions. And so, proximity to power is what you want to accomplish. It's where you want to be able to put yourself when you are trying to accomplish something. So we really do appreciate you being here with us, growling and prowling. And I do appreciate all of the callers. Now, if we take a look, go back right now to the ES Mini. Let's just take a look at it. And what we were talking about before we went off the air, right here is at 540 was when we were taking a look at the 30-minute chart. So we're looking at a 30-minute chart. So going down to a 10-minute chart makes all the sense in the world to me, whether you go down to a 30 or, from a 30 to a 15 or a 30 to a 10. And so as you're completing the pattern, here I'm going to just throw out a little crumb to you. You want to understand candles. It's important to put the candle formation as part of what it is that you're looking at. In this case here, as you're completing the 1 to 1.272, you're making Steve's hammer. Of course, that hammer candle there, that is a number 2. I've got 4 different hammer candles that I take a look at. That's number 2. That's not a bad one. You take a look at the low on that hammer candle being 1386.75. You can see the strength that you don't want to see it close below that if you're bullish. And, being tested is not a problem. It was tested at 9:30 as the market opened, got down to a low of 1386, closed back up above it. You then came into the next trading session with some volume contract-wise. You did about 77,000 contracts. That was in the 10-minute session from 9:30 to 9:40. And then you had some volume follow-through on the next trading session from 9:50 to another 75,000 contracts out there. That is on the ES Mini, folks. So if we simply go take a look at what's going on, popping and dropping, you've got Apple down just 77 cents right now. You've got Exact Target up 25%. Let's see what is going on with them. If there's a buyout, what's going on? Option to buy. Exact Target grants underwriters 30-day option to buy more shares to push out into the market. Let's just simply go take a look at that stock chart here. Close all these windows. The ticker symbol ET. ET, going back to the movie days of ET. And let's see here. Maybe this is the first day of trading. Okay, we're not gonna pay attention to ET on its first day of trading. Let's go take a look at Sturm Ruger, RGR. That is trading up. We'll put the ticker symbol RGR, see what that is doing here today. That has gapped up, and what has that gapped up into? It's going and testing out the high. It's going and testing this bearish engulfing candle that it had on February 22nd. Got up to a high of 48.68, and let's see if it got over that here yet today. It got up to a high of 46.78. 277,000 shares in the first 30 minutes of trading, going into 592. It's got some juice up there, and it does make sense that it looks like the top has been tested of that bearish engulfing candle. Folks, time absolutely flies too quickly. That's why I get to do 2 hours. One solo and one with my good friend Tom O'Brien. We'll be up next. Then you got Kate Stalter, Larry Pesavento. Then I'll be on a plane. Folks, have a great Thursday. Have a great weekend. I'll look forward to seeing you Monday morning. Take care, folks.